Evening.
Hi, Greg.
Maybe just to start on the two spaceport scenario, when do you expect to see any decision being made? How are discussions going? And is there maybe the potential to tie a second spaceport to any potential growth capital needs?
I think, we've always said generally from the time we really get serious, I think that's a 4 to 5 year effort to bring a new spaceport online by the time you work through all the needs of government, airspace, and depending upon the location, what needs to be done from a facility infrastructure standpoint. So for us, that wants to generally be happening in 25, although we are actively talking to various entities that are interested in this along the way. So generally, I think it's a 4 to 5 year piece, and I think 25 is the window when you would see us probably wanting to talk about something there. And then to your question on is that partnership that would happen proactively talking assuredly with a government entity, I would say at some level for airspace. Is there a way to blend that into growth capital? Depending upon the location, the government, and the interest there, I think the answer is yes, that is a possibility. Our partnership in Spaceport America is with the state of New Mexico, who owns and built that facility, and we leased that from them. So the major investment in that first spaceport was in the physical plant. Some of the places that we are considering have a lot of their physical plants built out already, and there may be other places where we could partner collectively to create a good economic engine for the community in which we enter. So I think that's a possibility, but I think it's dependent upon the government and the needs that they would have to be what would the specifics of that look like.
And then appreciate all the data and numbers that you gave. And of course, we always ask for more after you give that. But just thinking about, that growth capital and the two spaceport, I mean, how do you think about the free cash flow, conversion of the company at scale? And how does maybe CapEx play into that? Just thinking about the accelerated build of spaceships and just how you can convert that EBITDA to cash.
Thanks, Greg. This is Doug. So we wanted to give you the EBITDA so you could see what we're generating from the business in terms of operating cash flows. And that's all available to plow back into the business as we see fit. So we're pleased, that is a source of capital, that we can use to push all back into CapEx if we want, or we could scale back if that was the wiser choice. But most likely what we're going to choose to do is invest that, because that's how we get more vehicles faster and moves us, to the profitable columns as you move to the right. So we're going to want to invest in those vehicles and bring on new spaceships and motherships as quickly as possible, and get to the columns where you see EBITDA expanding as shown on the page.
And I think to Doug's point, as we invest in additional ships, the cost on those additional ships is coming at a variable basis, right? We will have already completed the upfront cost in the facilities, the upfront cost in the tools, the design will have been done. And so now we're replicating using, tools like the examples we showed today. And that gives us new ships at relatively low variable prices, and the return on those ships is great. So, anything we do from a CapEx standpoint, I think we're going to look from a ROIC, return on invested capital approach, and make sure that we're putting our money to shareholders' great use. But I see great return on investment for scaling our ships and our fleet up. And so that would be our primary first choice.
Thank you.
Your next question comes from the line of Oliver Chen with TD Cowen. Your line is open.
Hi, Michael and Doug. The addressable market sounds quite attractive. Just what are some of the key assumptions that underpin the 300,000 people at 8% per year? Also, as you mentioned, parts and sub-assemblies are an important part as we look to next year and the progress you've been making. How are you thinking about the supply chain in the current environment that you're seeing in terms of service and supply chain and the ability to get the parts and the people that you need. Thank you.
Thanks, Oliver. First, on the TAM estimates, so whether you think of it as a kind of a cascading filter or a bit of a Venn diagram overlap, we're starting with research on the number of people globally with a net worth of $10 million or above. That particular metric is the one that we expect to see growing at 8% annual growth, so it's starting there. And then we're filtering that in two sets of filters. One is a propensity of people to use a fairly substantial proportion of their net worth on experiences. So, unlike people who may have a lot of net worth and just like to stay at home or invest in other ways, we're definitely filtering for people who prioritize experiential travel in their lives. And then third, a stated interest in space travel, right, and getting a perspective of the Earth from space. And so that's kind of the funnel down around there, and that's we package that up with some of our internal understanding with our own team. I'll note of our existing our future astronaut group, probably half are in the 10 million and up range, and probably half are less. And I think that just depends on the people who are less prioritize this type of an experience and are willing to put a greater percentage of their available resources towards it. But hopefully that answers that question. On the supply chain side, we are constantly on top of supply chain issues. So by no means do I intend to imply, we never see an issue or a glitch. On the whole, though, we continue to manage them well. So we have managed the design of these ships ourselves, and we're managing the final assembly for ourselves. I think, as you know, we have Bell and Carbon as the primary people that will be creating the major sub-assemblies there. So we work with Bell and Carbon for a wider range of vendors to support. Some Bell and Carbon go directly, some we provide as owner-furnished items. And this is, in a good way, this is an aerospace program, and the aerospace industry is big. There are lots of suppliers, there are lots of availability. We are mostly a carbon fiber ship. We have metallics, those are typical in the aerospace industry, some aluminum, some titanium. And we've been way ahead of ensuring the material orders here, that we have the billets, we have the general supplies, and we've been ordering those up early so as not to let that get in the way. And then, you'll have a situation come up. We had one not too recently where one of the tools, as we're refining, what you'll hear is the loft of the tool, as we're refining the actual shape of what the mold will look like so the part will come out correctly. There can be analysis that needs to go in there. And some of our efforts needed to accelerate the analysis that we were doing, and we had to work through the supply chain to be able to make that move at a good pace. So that's, we have lots of smaller issues along the way like that, but so far the major slugs of material, major supply issues we are staying in front of, but it's a week-to-week look and forecast ahead to make sure we remain ahead.
Okay, and one follow-up. You've given a lot of clear information on the leverageability of the model as well as the opportunity. The equity value of the stock is pretty modest relative to the opportunity. So what do you think is more underappreciated in your opinion? It's an open-ended question. Thank you.
I think modest is a gracious term in the way that sentence is phrased, Oliver, but thank you. We would agree that the value that is being built into and created by the company is not accurately reflected in the market capitalization value that we currently are seeing. So what is in the way? Well, what are the risks that I don't think are in the way? I don't think technical risk is the question because we've proved that out with Unity. I don't think it's a safety risk piece, which is what we were demonstrating with all of our flights over the last year. It's not regulatory risk because we've worked through that with our spaceship Unity. And it's not product market fit, it's not customer risk because that's shown to have great value. So what's left in that piece is primarily driven by execution risk. Are we going to finish the work that we have and get that done in time and pace and physical discipline so as not to create financial risk? And execution risk happens. It's on all manufacturing industries, there's execution risk. How do we handle it? We have, first, massive diligence daily across all parts of this program to both make sure we're getting done the work that needed to get done that day, and we're looking forward to make sure that something new isn't on the horizon that needs firefighting. So that's one. Two, we keep contingency, buffer, built within our schedule and our plan. Our teams are not meant to use it, but we also recognize there are unknowns that nobody can fully predict, and we need to have the capacity to absorb those while also looking for opportunities to improve as well. So we're managing this very tightly along the way. And I personally, if I look at where the market is reacting, I think there's must be a heavy weighting into what I think is less fully informed opinions. We'll see opinions out of, look, Virgin Galactic is spending money without revenue. That must be bad. And while we are in a pre-revenue phase and we are clearly investing heavy capital in, it's very purposeful because we're building the assets and the infrastructure that will create an incredible company. And it's that last part, as simple as it sounds, that I don't think is being accurately reflected. So we have gone to the step of putting out a thoughtful video of our business model. It's 6 minutes. I encourage everybody to watch it, share with your friends, and it lays everything out
don't trust you. You disrespect the
and
investors.
And then let's have a conversation around that.
We could change
right now,
all of this.
I believe we're missing some of those important points.
What you're missing is you don't understand the investor.
And I think that gets missed perhaps in some of the past. So hopefully today is a good way to start changing that and getting better balance in information shared.
A video isn't it.
Thanks,
An interview
Michael.
with me
Doug.
would make a huge difference.
Thanks, Oliver.
Your next question comes from
That's
the
what
line
they need to
of
do.
Miles Walton
An interview with
Wolfe
me,
Research.
open and
Your line
honest.
is open.
That's what they need.
Thanks,
Not reserving
good
it for Travis Hoyam and all the idiots they allow to interview
You
them.
really get the juices flowing. I think it was well.
But they'll never do that because they want it scripted. They've told me.
Can I focus on slide 6 for a second? I just want to make sure I understand the economics, particularly the spaceline operations and SG&A of your initial fleet assumption. Because obviously, if I look at just the first half of this year, you're already annualizing, $100 million for spaceline and $120 million for SG&A. So how does whatever's in those two lines change from here to there? Or are you just saying, the costs that we're incurring today are going to be the same costs we're going to incur when we're flying 125 flights a year?
Yes, thanks, Miles. The costs that are in those buckets are very similar to what they are today, because what you see growing as we increase the flight rate is the variable costs that go up. So we bring in the revenue, and then we've got what we showed as variable spaceflight costs, which is the rocket motor and the fuel and the hospitality and all of that goes around the flights. But the fixed cost portion is
James
as it's stated, it's fundamentally fixed. The activities in that group varies over time. Right now, they've been working on flying Unity, and now we're working on things like getting the factory ready in Phoenix and so on. So we got people working on Delta programs. That group is still employed and doing different things, and then they shift back into flying. And then you start to see it grow as we add more and more vehicles from there. SG&A, also, it's by definition, fundamentally fixed. As we start to fly more, there's no real reason why it would grow more than a modest amount from where we are today in terms of administrative costs. And we've got the sales function is probably the area where you'll see the growth versus the rest of it, which is fairly fixed. So sales would be the area where we would ramp up over time in that bucket, to make sure we have all of the volume that's projected here. But that's really the logic behind it.
So there's no, I know there's an accounting treatment in the R&D line. That part I get. But there's no accounting treatment for the SG&A line because again, the run rate you have today is 120 million versus that 100 million or so you're targeting. So clearly something has to go away from what you're doing today within SG&A.
There's a small, yes, so good observation. So there's a small portion of this that will get reclassed into R&D or spaceline operations. We have some kind of functions that are involved in management and so on in this phase of our operations. But as we shift to flying and we move down the road, you will see some reclassing into those other buckets out of G&A, but not a lot, but the amount you just mentioned.
Okay. All right. And then just one quick one. The number of astronauts in the backlog, how stable has that been? I know this maybe 18 months ago was 800. I think at the end of the year was 750. I think the presentation, the video said approximately 700. Are you curating further the backlog? Is there a little bit of bleed off? What kind of movement are we seeing in the backlog?
Mostly you're seeing, I'd say, mostly it's stability. So we have been holding the same basic level going through. We flew a number of people over the last year, so that was partly going down. There have been a couple places where we saw a bit bigger drop of folks that have come through, but that's pretty stable. Of the folks who have dropped out, the large majority of that have been folks who are very early in the program for various reasons. Some are in a change of life stage. Some may have other issues have come up. Some may have had health issues that have come up. And so the majority of the people who have stepped away from the program, at least at this stage, have been preponderant. The preponderance of that has been our very early folks. We feel very strong about this group. We stay connected with them. We're working and we go to the various cities where we have large groups of them and give updates on the company. And they're incredibly valuable group of people to us and as a company. As we shared, we don't have sales open right now, so we're not actively working to backfill when these open. This still gives us quite a backlog, and we're comfortable with the amount of backlog we have right now. But when we do open up sales, you'll start to see these numbers go up as people kind of come in on the tail end of the line here.
Okay. All right. Thanks.
Once again, ladies and gentlemen, if you have a question, it is star one on your telephone.
Please tap the like button. We'll have a vote afterwards, discussion,
comes from
and
the line
behind the
of
scenes.
Michael
Stick with us to the end. Thank you.
Capital Markets. Your line is open.
Hey, good afternoon.
Also live phone in at the end as well.
Free cash flow guidance. I think you previously expected 2024 to be the largest cash burn in support of the Delta class ships. So just given what you've done to date in the 3Q guide, that would imply a 4Q burn of around 135 million. And that's just to be in line with 2023 burn level. So are you expecting a step up in cash burn in the fourth quarter, maybe in the 140 to 150 million range, just assuming that you're still expecting 2024 to be the largest spending year?
Yeah, thanks, Mike. This is Doug. So yes, we do still expect 2024 to be the largest spending year. It's about flattish to 2023, a little higher. We didn't give guidance past Q3, but I can give you some direction that, as we talked about in the prepared remarks, we do have an acceleration of activity going on with the tooling development and parts fabrication. That's a Q3, Q4 activity and trailing into Q1. So you'll see the kind of local peak be around the Q4, Q1 timeframe, and then you'll start to see things ramp down in Q2, Q3 of 2025. So that's directionally, where we see things going. A little lower than the amount you just highlighted, though, not in the level of 150, that kind of number. We're lower than that.
Got it. And then any change in how you're thinking about research flights as Delta class starts to ramp? Are you still targeting that 10% or so range of flights slated for research? So that's the first question. And then secondly, we got to see the research product in action and heard the great testimonials of some of your customers. Have any more government agencies inquired about research flights now that you've kind of proven the reliability of the offering, given the success of Unity's flights?
I'll take that one, Mike. The research program and research product that we have has been equally successful, albeit from a different customer lens, as our private astronaut flights. We typically spend most of our time talking about our private astronauts. But it's very successful because we offer access to a microgravity environment that relatively is quite long and quite clean, and at the price point is quite valuable for the price charged. And so it just kind of wins on every front there. We have had, I think you probably saw Kelly Girardi and a group of researchers have signed on for another research flight. I think you'll see things like that with people who've flown before. We obviously do that with payloads. Lots of our university partners are repeat flyers as they either do new research or use our platform to refine their research before it goes further out to the space station or even beyond. So the product quality has been very good, and the repeat availability of it will be very good. Most of our research customers, not all, but most, need pretty specific dates. Most of them are government funded, and most government funding requires some specificity of dates. And we're a little far out from getting real specific with our dates, and we know generally there, but the customers need us to be a little more specific. So as we get closer in, you'll see us also start to ramp up research sales as we also open up private astronaut sales. Now, you asked about 10%. I think that's a nice target in the early days. We'll see as we scale this up, right? If you go to page 6 on this chart, as we start getting to, 275, you get to a second spaceport. That's a lot of space flights. I don't have a sense if the research market will continue to scale to 10% all the way up, but I definitely think that's the right target in our early periods for sure. I will note we adjusted our pricing. While we don't have sales open, we do take referrals from existing customers and as I've always used this term, some house seats that we offer. We've brought those prices into parallel. So at this point, every seat equivalent, whether it's for a private astronaut, a human researcher, or we remove the seat and put a payload rack in, all is at $600,000 on a seat equivalent basis. That's our kind of current off the market price. When we really open up sales for the Delta ships, we'll reassess our pricing again.
Then lastly, I appreciate the economics that you provided. Just looking at some of the assumptions, is it 4 spaceships and 2 motherships at Spaceport America before you start to look into expanding into a second spaceport? Is that kind of what you need to see before you build a second spaceport? And is that the expected capacity of a spaceport in the future?
It's not that we need to see that before working on the next spaceport. We'll definitely start working on the next spaceport even before these Delta ships launch in 26. However, it's the smartest place to go first. One thing you'll notice if you start doing the math of ratios of how is revenue and contribution margin growing relative to these cost lines growing, and we have a bigger set of leverage as we move from the initial fleet to the expanded fleet than going from 1 to 2 spaceports. There are a couple of things behind that. But to the question you're asking, Mike, it's primarily because two spaceships and one mothership, that's an imbalanced line. It's an underutilized spaceport. We have a lot of our fixed costs in to run spaceline operations there, and even in SG&A, as one of the earlier questions was talking about, that we can fully get leverage on as we add a couple more ships. Now, this chart shows us with 2 and 4, and then at that point, like moving to an additional spaceport. There's, you've heard us talk about higher than 275 flights in the past. We're trying to be reasonably conservative and not getting too far ahead of what weather will look like when we get to additional spaceports. And so trying to have a balanced place there. But it may be that it's worth adding a 5th spaceship in each of these things just to have a hot spare ready and being able to pick up additional set of flights along the way. So you might see us tweak the numbers, but what we have here on the page is where we would like to start each of these spaceports.
Got it. Thanks, guys.
This concludes the question and answer session. It will also conclude today's conference call. We thank you for joining. You may now disconnect your lines.
There we go. Always surprises me with the way they just end. They never do a conclusion. I think it would be nice to address the investors at the end there. There's once again, for me, there's just a disconnect to the investor. There is no connection with the stress that the investor is under. This is a retail investor stock, and they're not addressing that. I told them time and time again, we need to have an interview with Michael Cole-Glazier, unscripted, and they won't do it. They go to Travis Hoyam, it's scripted. They went to a Facebook group with like 20 followers. Ridiculous. They won't come to the biggest audience in the world. Throughout that, I was doing some research to see who is covering Virgin Galactic tonight, and I'll show you. I'll do it in real time as I was doing it, so you can see I'm not making this up. If I go to YouTube right now, I was doing this throughout the show. So if I go to Virgin Galactic earnings, right? Who was covering it live? Just me. I own the entire space. There is no competition. If I go live, no one's covering it anymore. This is not Virgin Galactic. This guy's got 4 people watching. He's got 40 subscribers, right? He's doing a bit of Robinhood, actually. He's doing a bit of both. Anyway, just me. They're not showing it on their channel. No one's covering this stock anymore. Virgin Galactic stock. I rank number 1 in the world for it. There's no one covering it anymore. If we still look at SPCE stock, I'm going to open the phone lines up right now as well. And this is not good. Mr. B says you want competition, right? Look, I'm number 1. I'm always number 1 on the stock. And there's just no competition, right? You want competition. You want everyone talking about the stock. They were talking there tonight, first starting to get an idea. They don't know why the stock is so low. The reason it's so low is a discontent with the shareholder. The shareholder doesn't trust them at all. Doesn't believe Eric Kearney. Everyone believes Eric Kearney is a complete liar, and he's all about the shorts and GameStop. That's where he came from. Michael Cole-Glazier is always burning cash. He came from Disney. Doesn't know how to stop wasting money. They just don't understand that the investor, in my opinion, from that earnings tonight, there's nothing we've learned new. I think the stock will be down again tomorrow. There's a little pop now. Few people are trading out of the overnight hours. Of course, overnight hours. There's no overnight hours for Virgin Galactic. It'll go till 7 o'clock. We've got 2 hours left. I think you're going to see a bit more, maybe even turn green, maybe, and then it will dump again. It will go lower. It'll be $4 tomorrow. And of course, they want to raise some more money. the shareholders going to pay for it again, when it could come from the compensation that they paid themselves. Of course, they could pay themselves a bit less, like Peter Rawlinson, who took all the money out of Lucid, $500 million a year in wages. I don't know. I'm glad they're on track. I'm glad everything's still okay. But when we have to stand back, and when we sort of take a sort of step back and we say, okay, on track, well, let's just remind ourselves that this company went public in 2019. Let's remember that, 2019. 5 years later, here we are, and we're still waiting, I think until they understand how the retail investor feels, and by the way, I happen to know from my X and my Twitter and my LinkedIn, I think they're listening into what I'm saying. So Eric Kearney, Michael Cole-Glazier, if you are listening to me now, and it looks like you are, looking at my LinkedIn, if you are listening to this, tonight, I would like to say to you, from the investors, we still represent the world's retail investors. We rank number one for this stock, more than you do on your own channel, more than virgingalactic.com, more than your YouTube channel. We do. If you would speak to me unscripted, not the way you present it to others. You mentioned in there that you did that you talk to others and do presentations. We know how you do those things. You provide scripts. It has to be done your way. The retail investor doesn't like it. If you're going to get this stock price up, and it should be up, it should be at $12, $13 right now. My prediction, it will be in the region of $4 tomorrow. All you've got to do is contact me and ask me to do a live, unscripted, unedited interview. Talk to me honestly. You need to convince the investors that you understand that they have paid for you to run around the way you have. This is a publicly owned company. It's very much a retail investor company. And the retail investors are not happy. They're not happy with your performance tonight. They love the product, they love the dream, but you're not delivering it. It's taking time, they understand that, but they just do not like Eric Kearney. We have done polls. Sorry, Eric, I can see very good indication that you're actually listening. I can tell you now, Eric and Michael, that we have done polls, and the retail investors do not trust and do not like Eric Kearney. They want nothing to do with him. And as long as you continue in this vein, you're not going to get mass adoption from the retail investors. They're not happy. And you'll continue to have the stock driven down. I did a analysis tonight on your stock, and there is still hope for the company. But until you decide to speak to me openly and honestly, unscripted, allow the retail investor to have its say, you do not have any support from the retail investor. And if you did, the stock price would be up. Eric Kearney, you once told me on an interview, our last interview, when I said, that's enough, I've had enough of you. You told me that you were okay with the stock price, considering the current climate, considering where the stock market was. That was ridiculous, and I told you that was ridiculous. And you also said you like to talk to me about your time at GameStop and how YouTubers can influence a short squeeze. And I was disgusted by that, because this is not GameStop. This deserves better. And I think the retail investors would be far happier if you step down. Until then, this stock is not going to be mass adopted by retail investors and bought up. They want to buy it. They want to see it do well. I want to see it do well. So I know it looks like you are listening to me from my LinkedIn and my Twitter and X. It looks like you are. Listen to what I'm saying. Please do come back to me. I will not come to contact you. I will not email and message you. I'm not doing that. I'm not going to chase you again. But if you want to talk to the retail investors, unscripted, openly and honestly live, then that will save your stock. I honestly believe that, and that is for you to decide. We're live right now. We've got 132 people watching. We're the only channel in the world broadcasting your content tonight. No one else is bothered about it. It's up to you. That's an open invitation, but it will come with the conditions that it's completely open and honest and unscripted, and I will ask you any question and you'll have to answer it. If you can't do that, then I'm not going to be controlled by you and told what I can and cannot say. There we go, folks. I do believe from my sources online that they were listening to that. You heard what they said at the end. They were concerned about the retail investor and the price. So it didn't surprise me, as we're the only ones covering it. Okay, let's have a look at your comments just to close out. I think it's better that Virgin Galactic doesn't get any attention. Otherwise, the amateurs will just start buying and selling for no reason at all. Martyn Lucas, like Bob Hope, used to sing that song, Thanks for the Memories. Was there talk previously of building or working on a new supersonic commercial plane similar to Concorde? I didn't hear that. If you are, whoops a daisy, let's get rid of that, sorry. Eric, if you are here and you can hear me, please can Martyn phone in on your next earnings to ask a question. James, I'd love to. Eric, if you are there, please like the live and subscribe. Well said, Martyn. Thank you, DJ. And to the music channel also, yes. Was Eric the troll who subscribed from Martyn? Yeah, probably. I want to see space do well. We all want to see space do well, but until they change their tone of arrogance, it's not going to happen, is it? All Virgin Galactic needs is a real marketing team that's hungry and creative. I agree. They were like all excited with themselves. They produced a video. Check out our video. Buy our stock. We're great. Just talk to the investor. That's all you've got to do. Back again, driving around Florida. Please correct me if I'm wrong, but just filed a ton of SEC filings up to and including stock options for the employees. It makes no sense, the stock price now. Eric will never do that, Martyn. Let him go and play. I don't think for a moment they'll call me. I don't think for a moment that they care, honestly. They shoot themselves in the foot every chance they get. Yes. Right, okay. Now then, what we're going to do is we're coming to the end of the show. Thank you very much for joining me. What I'd like to do now is introduce you, is end the show right there, introduce you to our extra channel where we are live 12 hours a day behind the scenes. Going to send everybody there. You can continue the conversation. It's live again now. This is where we were earlier for the IonQ earnings. So going to send you there right now. Going to give you the link. Join me. It's 12 hours a day. It's only for investors, not for trolls and bots and scammers. We have a $1 paywall to chat. Anyone can listen, but if you want to chat and be part of it, we are there in the extra channel. Join us there, and that way you can get an experience of what it's like. In the morning, I am back early on the main channel. Tomorrow morning, we are covering Krispy Kreme. I called it. Apparently, it's Krispy Kreme. I thought it was Krispy Kreme, but apparently I got that wrong. It's Krispy Kreme. So I'll be there for the opening. I will be there for the earnings, then the opening bell, closing bell. In the evening, we have Funware on the extra channel and Soundhound on the main channel. That's it from me. Thank you very much for joining me once again. We'll always cover Virgin Galactic because our investors care about it more than they do who work there, at least Michael and Eric and those that pay themselves huge amounts of money, and the stock just bleeds because of it. Anyway, join me now on the extra channel. Be part of the behind the scenes. And that's it from me. Thank you very much indeed. See you back in the morning. Join me now on extra. Until then, as always, take care of yourselves and each other. Okay. Thank you ever so much, everyone on TikTok. See you back in the morning. If you want to join us now on YouTube, click the profile here behind the scenes. See you there. Bye-bye for now. Okay, let me just come back to here a moment. Okay, people on Extra, let me just shuttle this down, turn this round, and hopefully you join me behind the scenes here. Okay. And let's bring up the lighting just one moment. There we go. Okay, that's it from me. I'll see you back in the morning. Welcome to all our viewers who have popped in to say hello. See you back in a bit.